Today the Labor Department released its latest consumer price index, which showed inflation on the rise in February. The data came exactly in line with market expectations, with the headline rate of inflation at 6%. While the energy costs decreased, shelter costs increased 0.8%, providing key insight into Federal Reserve decisions for the upcoming weeks. Wall Street reacted to the news by pointing to a positive open in markets, but with banking sector turmoil looming, speculation has changed regarding potential Fed rate hikes. Markets were pricing a peak, or terminal, rate of about 4.92% before the news, suggesting a 0.25 percentage point increase next week could be the last. But Federal Reserve Chairman Jerome Powell last week provided insight that the Fed is prepared to go higher if inflation does not come down. This has sparked a wave of speculation that a 0.5 percentage point hike is on the table next week. The Fed looks to a few key measures when formulating its monetary policy, such as the consumer and producer price indexes, before it meets on March 21 to 22. Wednesday's release of the producer price index will serve as the last data points for policymakers to review before deciding further on rate hikes. The market shift in sentiment has been dramatic, and investors are now eagerly awaiting the Federal Reserve's decision in the upcoming days. It remains to be seen whether or not the central bank will raise rates as expected, or remain in a pause if the inflation results are not as high as predicted. While the reaction in markets is volatile, the key question for Federal Reserve remains: what is the most responsible way to manage the economy?